Okay, let's go over the chart of the week for December 27, 22, and this is kind of a fun one. We have wine versus stock. And so the black line is the S&P 500 index, or the 500 largest US companies, and the blue line is the LivX Fine Wine Investable Index. And that is the price movement of 100 of the most sought after fine wines on the world's most active and liquid marketplace. So if you look at these two, actually, since its inception back in 1988, wine prices have held their own. They've actually done better than the US equity market. So, and another thing to point out is depending on your perspective, the blue line is just probably another example of the rampant inflation that we're experiencing. As you can see over the past 20 years, it's done better than the US equity market. Or you can look at it as an interesting investment opportunity. Unfortunately, there are no mutual funds, ETFs that you can invest in to have that exposure in your portfolio. There are some companies, but they're very diversified in what they do. But you would typically have to go out and buy that wine itself. Okay, but as you can see, it's done extremely well over the last 20 years. The last interesting comment that I'll make about this is that when we go through, when the market has trouble during the dot-com era, the great financial crisis, and this year with the markets being down 20% or more, the fine wine index actually does really well. So as you can say that everyone is, the market's doing bad. They hit the bottle, they start drinking instead. Well, that is true. I mean, that's what's showing from this chart. So as we head into the holidays, hopefully we'll get a little rebound so you won't have to be dependent on the bottle. But so have a Merry Christmas and a Happy New Year.